Hello and welcome to Closing Trades right here on ET Now, the last trading day of this fiscal, and we're closing off a little bit weak. 23,600 is where we're currently at. It's IndusInd Bank, which is weighing heavy all the way. There's Cipla, there's Shriram, there's Infosys, Maruti, Adani Enterprises. And today, the broader markets as well are under pressure. In fact, as I speak, all sectors are in the red. With also ICICI Pru, Wipro and IDFC First seeing pressure. But there are gainers as well. Look at a mighty BSE that's sprung up about almost 17%. ONGC, Tata Consumer, Muthoot Finance and IGL are some of the other winning stories of the day. But as we mark the closing of the financial year, let's take stock of the year gone by. And Ansh is here with all that analysis.
Well, it has been a very positive financial year, especially for broad indices. If we talk about Nifty, the Nifty has been up by around more than 5%. Sensex is up 5%. Mid cap is trading with a gain of more than 8%, whereas small cap is up by more than 6%. And over 60% of Nifty, mid cap and small cap stocks are in green this financial year. Also, if we talk about these four indices have actually touched record high levels as well in this financial year itself. If we talk about movers, then let's talk about Nifty, top gainers and losers. And here we are seeing that BEL, Bharti Airtel, Shriram Finance, M&M, Trent have been gaining more than 30 to around 50% in trade. Whereas if we talk about losers in FY25, then Nifty losers, we are seeing IndusInd Bank, Jio Financial, Tata Motors, Adani Enterprise and Hero MotoCorp. Let's also check a few movers of mid-cap index as well. And in mid-cap space, we are seeing Mazda Dog, BSE, Paytm, Dixon Tech and Bharti Hexacom as the top gainers, gaining more than 70%, and Mazda Dog actually giving an up move of more than 100%. Whereas if we talk about losers, then Vodafone is the top loser here, followed by Ola Electric, Astral, Sona BLW and Adani Total Gas. Let's also have a quick look on small cap movers as well, and here we are seeing that PG Illustrapast is up by more than 400%, followed by Garden Reach, Godrej, Philip, Amber Enterprises and Newland Lab. Whereas if we talk about losers, then in losing front we are seeing Sona Software, Birla Soft, Brainbee Solution, Delivery and Aarti Industry. This were the top mid-cap and small-cap and Nifty movers. Now let's also talk about the sector indices. And here, if we talk about FY25, then we are seeing that pharma is the top sectoral gainer so far, followed by metal, which is also up by more than 10%. Banking is also doing good, more than up by 9%, followed by IT, whereas auto is almost flat. If we talk about losers, then here we are seeing that Nifty Energy, Nifty PSU Bank is down by more than 10%, whereas Realty is down by 4.5%. FMCG is nearly flat for this financial year. Let's also talk about FI flows and DI flows for this financial year, and we are seeing that FI have net sold nearly 4 lakh crore, whereas on the flip side DI have actually bought around 6 lakh crore. Also, if we talk about IPO moves in this series, in this financial year, then we are seeing that in this year there were nearly 103 issues and they have actually raised more than 2 lakh crore.
All right, thank you so much for that, Ansh, for putting it all into context, how the year gone by, financial year gone by was for our markets and what are the key trends to watch out for. We have Sunil Subramaniam as well as Kunal Bothra and Naresh Mirani joining us on the show right now. And Kunal, let me come to you. Last day of the last trading day of the financial year. We have come next week. We will be entering into a brand new financial year and also a week which will be marked with a lot of news flows, volatile news flows.
Yeah, I think week, month, quarter, financial year, all of that happening for the markets today. But I believe that the close for the indices and especially in the last 1 month of the recovery would probably give it some hope that maybe all is not extremely negative or pessimistic for the markets. This recovery, what we've seen this last 1 month, almost 1,800 points recovery for the index and 2,000 plus point for the bank Nifty. I think that's something which the markets would probably want to take it with both hands and try and carry it forward. We've seen good sector churn, and even in this phase of the markets today, for example, the markets being a lot more volatile than what we've seen earlier. We've seen large cap stocks actually being a lot more resilient. Even on a day like today, there are a lot many stronger banking names, for example, which have been doing fairly well for themselves. So when you have such kind of a market construct where you see large cap stocks still acting strong, robust in terms of price action, even if there is a tad bit of volatility for the indices, the expectation is that the trend should be on the upside.
Okay, trend should be on the upside. There's, of course, one stock which is really nailing the gains there, and it's got to be BSE all the way. The fact that NSE deferred the change of expiry day, that itself has been a big trigger and big overhang lift for BSE, which has been fairly under pressure. Sunil, do you think the entire capital markets theme, as structural a story as it may be, do you think in the next 1 year, too, it can make money, as was the case past 2 years?
Yes, I do think so. This for me, the question?
Yes, Sunil, for you.
Yeah. So I think, yes, capital market story can make a big play. And reason for that is starts off with the 1 lakh crore giveaway by the finance minister, right? I'm sure a part of it is going to come into savings and investments, and a lot of that will get routed through mutual funds and equities. So I see brokers and wealth managers and asset managers and insurance companies, all of them benefiting from the flow. So I think capital markets are in. Bear in mind that the F&O and the retail equity trading is probably going to be down a bit. So pure stockbrokers and all may not see the same level of revenues they saw last year. But the rest of the ecosystem of the capital markets, I think will definitely be a gainer. And I think the new SEBI chairman also has come out publicly with pro statements for both FIIs and DIIs. And I think that supportive measure will also play an active role here.
Very good afternoon to you, Sunil. Just I wanted to mark the flash on the bottom of your screen. You have news coming out from Informis saying that the High Court has said that the restaurants can't levy service charge mandatorily with food bills. So that's the latest coming in from High Court. And let's see what some of these restaurant stocks are doing at this point in time. Let's take a look at what Specialty Restaurants is doing, or for the matter of fact, Jubilant Foodworks, or Westlife, I beg your pardon, Westlife Food. All of these counters, let's see what's the move there, and that initial dip coming in on Specialty. Also, you'll have Jubilant Foodworks. So let's watch out for this. We're yet to get the key reason why this sort of ruling has come from the High Court, but restaurants can't levy service charge mandatorily with the food bills. That is what the High Court has said. All right, let me actually go on and let's take a view on the entire exchanges pack, actually, Naresh, from you. Not just BSE, I wanted to know about MCX as well. How is this one looking to you on the charts?
So, starting off with BSE, it has made a strong recovery, and we are back to that 5,400, 5,500 mark, which is where it was sustaining for a period of time. But 6,000 remains a resistance. For now, it seems like overdone in the near term, so would be an avoid. MCX similarly has been in a downtrend with lower tops and lower bottoms. Unless it crosses 5,600, the stock could continue in a slow drift downwards or sideways consolidation.
Avenue Supermarts, the company has added 3 new stores. And of course, you know, CLSA is saying that the store addition momentum is quite strong for them. They've maintained and outperformed with a target price of 53.60, which indicates a good over 30% upside from the current levels. Kunal, you've been quite bullish on Avenue Supermarts, right? I mean, it's been your pick for the last, 3 odd days, if not more. Do you sense that 53.60, 53.50 plus levels is a possibility on the charts?
Yeah, it's a possibility on the chart. So the stock is building up its base. So over the last 2 years, 2022, 23, and good part of 24, the stock has been holding on to this support of 3,500 mark. In fact, this level was tested, I think, 4 times in this time span for Avenue Supermart. So which means that there's a solid base building which is happening for the stock at these kind of strong support levels. And eventually, when we see stock establishing a strong base or a support and then consolidating for such kind of a time span, you see these stocks making new highs for themselves. Just as an example, you've seen that happening for stocks like Bajaj Finance, HDFC Bank, Kotak Bank, where these stocks have gone through 2-3 years of a patch where these stocks have been stuck into a trading range or into a consolidation. But then whenever these stocks come back into a breakout or an uptrending mode, the first level of breakout is the previous major highs for these names. So I believe Avenue Supermart falls in that kind of a category. Would be surprised if in the next say 12 months or so, the stock actually scales past about the 5,200, 300 plus mark.
Okay, pretty much in sync with CLSA's view. That's the reading on the charts for Avenue Supermart as well. On that note, we're going to take a very quick break.
Welcome back. You're watching Closing Trades on ET now. As you can see, the markets are trading flat. As of now, they slipped into the negative bias. But time to take stock of the latest changes to Chris Wood's greed and fear portfolio. Gaurav is standing by to tell us exactly what he's written this time around in that note. Gaurav?
Well, yes, Chris Wood's Greed and Fair, as always, coming up with new perspectives. When we look at the report, there are two main perspectives that we can highlight. So first, let's talk about the global scenario. What they're saying is that the extreme change in sentiment is what they're seeing in the US market from the investors as well as global fund manager. In fact, they have highlighted that biggest reduction in US equity exposure was ever seen in 24-year history of this survey. Other than that, they also believe that there will be a shift from US market to emerging markets. They believe that there will be a sell-off when US market will boom, and as a result this money will flow to markets like European market, Chinese market and other emerging markets. And there are two reasons. First is that they believe that allocation out of US market has already started, and second is that US still remains overvalued when we look at the growth of the stocks. Other than that, what they believe is that in terms of tariff changes, this is going to be a negative news because most of the countries' existing tariffs are higher than America. Lastly, when we look at Indian portfolio, they have done some kind of reject in the stock. So first, let's understand in terms of the real estate, they have actually reduced the position in Godrej Properties, and as a result they have increased their position in macrotech developers almost by 1 percentage point. Other than that, they are also saying that investment will be made in DLF Limited, and on the other hand, some stocks like Make My Trip will also be introduced in the list. And as a result, when we look at some other stocks like Axis Bank, they will be reducing the position from there. When we talk about stocks like Zomato, the new age stocks, there also they are being a little bullish. They will be adding the Zomato in their investment list, and they will be reducing the weightage of TSMC. Lastly, let's also not forget that they are saying that they will be adding the exposure to Reliance Industries almost by 2 percentage point, and as a result they will be reducing some exposure from HDFC Bank and SBI almost by 1 percentage point each. So definitely a new reject which is coming up on their long only India portfolio as well, and definitely a new view coming up almost for the globe as well as the Indian market. So on the back of this note, we will be watching out on these companies and see what happens and how it turns out for investors.
Okay, that's quite an interesting take coming in the latest Jefferies Greed and Fear note. And quite interesting takeaways there. The fact that they've actually upped the weightage on Reliance by 2 percentage points and Zomato by 1%. Zomato, of course, is one stock that they've been extremely bullish on. They've also made some rejig in their realty portfolio as well. But before that, Sunil, wanted your thoughts on Reliance. I mean, everyone's been waiting for a demerger either of the retail arm or Jio. Where do you think the next big trigger for Reliance is going to come in from, besides, of course, the fact that the stock has really been beaten down in the recent market correction?
Unfortunately, I can't talk stocks. Sorry for that.
Okay. Naresh, what's your reading on the charts? Do you think Reliance is positioned to move up higher?
Yeah, so very interestingly placed. The stock saw the largest correction in the heavyweights, went down below 1220, did not see any follow-up selling pressure. And now we're back in the middle at that 1280 mark. 1340, 1350 has been the top for the last 4 months. If that breaks, that would confirm a trend change, and we could see a much recovery all the way towards 1500 also. So for now, 1240 becomes a stop loss and upside. Watch out for 1350. If that breaks, we get to a reversal, and then plans could lead in the heavyweights.
Reliance. The other interesting idea, of course, has been the investment that they've made in the Indian online travel company that's Make My Trip, which is going to be introduced with a 4% weighting in removing the investment in Axis Bank. Sunil, what's the best way to play on this entire travel and hospitality boom?
I think both hotels as well as the travel portals and airlines. I think these three are the ones which are going to benefit. We've seen the Kumbh Mela recently, how all of these things spiked. And I think there's a huge, both medical tourism as well as religious tourism are probably going to drive the next wave. And it's not just international tourism, even domestic travelers, I think, are sharply picking up their thing. And especially airlines, I like, because I think there's a huge shortage of capacity. There's a shortage of planes. We have a huge order for planes waiting to be executed, but it's going to take quite a few years to come. And some of the existing players have gone out of things. So I think those remaining players in the business are going to have a good time. And I see airlines as leading the play, and naturally, counters which are facilitating that, like you mentioned, Make My Trip and the similar kind of travel facilitators, as I would call them, right? And offering the complete one package solution, right? Right from train, bus, as well as airline to hotel bookings to transit from. I think that's something that people will look to do because nobody wants the hassles, right? They'd like to go to a one-stop shop and complete it. So I think all of the three counters that I mentioned, I think will do well in the coming thing, especially given the fact that this $100,000 rupee, sorry, tax giveaway, not all of it is going to be either saved or consumer durables being bought. People are also going to feel happier to go and travel.
Absolutely. Sunil, so good having you on the show today. Thanks for your time as always. Let's move on. Let's get you some closing trading ideas then on that note. Naresh, what's on your list?
So that would be a buy on Nykaa, which is clearly showing a lot of strength today. Very close to a breakout of the last almost 6 months. Breakout of a 180 would make a trend change. So expecting this to break out over the next few sessions. Upside of 200, stop loss below 175.
That's quite a conviction that Naresh has been having on Nykaa of late. Kunal, what about you?
I'll go with HDFC Life, something which we discussed in the morning chart busters. Looks very interesting. The stock confirming a weekly as well as a monthly breakout, and especially after almost 3 to 4 months of a massive consolidation. So it looks attractive for a potential target of 700 to 750.
All right, so those are the closing trades coming in from both of our experts. On that note, we'll slip into a break on this edition of Closing Trades. Don't go anywhere. 30 minutes left to go for the last trading day of the financial year.
Back with closing trades right here on ET now, and closing the financial year just very tempered. 23,500 is where we're currently at on the Nifty. And even the broader markets are under pressure, to be fair. The last trading day for the week, the month, and of course the fiscal as well. We're closing in a little bit tepid. Yes, 23,800 continued to be elusive. But let's see, who knows, maybe the start of next week, given that April 2nd should soon be out of the way, provided it's a decisive move or statement that we hear from Donald Trump on April 2nd. And then, of course, for us, it's going to be all about the earnings. It's going to be about the FI trend. And globally, of course, we're going to keep a close eye on the ramifications and repercussions of the tariff implementation, should that be the case. Right now, of course, all sectors led by technology, realty and banks, they're all under pressure. But Gurmeet Chadda is here on the show with us. Gurmeet, hi, afternoon. Good to have you on the show. As we close in on the financial year, Gurmeet, what's been the biggest learning that you've had personally from the markets?
I think the biggest learning is that never ignore valuations, I think. And the tide can turn very quickly. Sometimes you tend to ignore that in a good time and start discounting, high growth rates for longer. Like big order books without realizing orders can be delayed, can have execution risk, giving high multiples to ideas which you think can't be disrupted. And everything is cyclical and reverse to mean is what market basically keeps telling you. It's like a pendulum. If it goes to one extreme, it has to figure out to come back and then go to the other. So but overall, I think probably now ending slightly on a better note. It's not as bad as it was in February and in first week of March. And I think the macros are improving. And I think hopefully we should have a better financial year than what we have had in last 3 to 6 months.
Some amount of sanity, Gurmeet, now that it's already kicked in. How far from the next leap, which was the peak of 2004? Or do you think we're not going to get back to those levels in any hurry?
No, I don't think so. We should spend time predicting that because eventually market will make again, a higher low and a higher high, which is what it has been doing for last two decades. I've been in markets, so I think instead of focusing on that, I think the focus should be what can do better from here rather than focusing time on market levels. Nobody can really guess it. But I think, as I said, there are few pockets which are, I said, looking better now. Valuations have become reasonable, whether those are financials. I think the basic high frequency indicators, whether it's your power demand, whether it's your toll collection, advanced tax collection, and even the finance minister yesterday spoke about economic indicators pointing to a better quarter. And if we can get back to 7.5% kind of a GDP growth, and maybe double-digit earnings for next quarter, I think we should be good. I think earnings are the key, and I think if we can demonstrate sequential improvement in Q4, I think the market probably should stabilize.
Point taken. Thank you so much for that, Gurmeet. But we'll come back to you. Before that, let's actually get the news that the cabinet has approved PLI scheme for electronics manufacturing. Prakash is here with all the details on that particular front. Prakash, what are you picking up from your sources?
Yes, it's an important development coming in as we are learning from our sources that the Union Cabinet meeting has just concluded, and it has given its nod to a PLI scheme for manufacturing of electronic components. That's an important development coming in. As you are aware that the previous scheme, the tenure of the previous scheme has been completed, and therefore a separate proposal had been sent. A separate proposal was sent by the Ministry of Electronics, and therefore it was considered today by the Union Cabinet. And as per the proposal, what we are learning from our sources, the Cabinet has given its nod to approximately 24,000 crore to 27,000 crore for this scheme. Some critical components such as displays, batteries, camera modules, printed circuit boards are going to be manufactured under this scheme, and that will cover entire value chain of the electronic manufacturing. So the government's objective is very clear: to cut down import and then become self-reliant going forward as far as electronic manufacturing is concerned. As per the initial estimates, the government believes that they'll receive more than 50,000 crore investments under this scheme. It's a very, very crucial development coming in, especially at a time where the government is expanding its domestic manufacturing base in various sectors. And now, and today, Union Cabinet has approved PLI scheme for electronic manufacturing. So there is a press conference scheduled at 4 p.m. today, where the formal announcement will be made by the government.
Thank you so much for that, Prakash, for getting us those details when it comes to the PLI scheme, especially for electronics manufacturing. You have Keynes as under pressure. Let's take a look at what Dixon is doing, as well as Amber Enterprises as well. And these counters have actually drifted lower over the last few couple of minutes. Coming to you, Gurmeet, I wanted to understand how you gauging this entire space. EMS, one of these narrative stocks at one point in time, making a comeback, struggling to make a comeback. What's your take?
Yeah, I think the valuations are still high despite correction from the highs. If you look at Dixon, we hold Dixon in our portfolio, but and we've been beneficiary of the move it has seen in last 3 odd years. But don't see much room to add further. I think a lot of good news is in the price. I would probably want to see the value addition having an impact in electronic component segment in their margins. I think what we are seeing is they are low single digit, and if we can demonstrate slight improvement in margin in different verticals, I think that to me would be a trigger for whether to look at the stock or not. Otherwise, you're already at 3-digit earning multiple. So it's kind of capturing all good news. Amber also, to a large extent, again richly valued, serves RECs. And if you see of top 10 AC makers, 8 of them are their clients, including Daikin, Voltas, Panasonic, Blue Star, etc. And now they are obviously diversifying. So I think you want to probably see any improvement in margin. And obviously, PLI related news can have a bit of an impact in terms of the quantum for a few days, but in terms of incremental addition, I think you're better off with some of the white good players, pure play, where the valuations are still more reasonable compared to the EMS names.
So that's the take coming in on some of these EMS spaces where the valuation still looks a bit, tad bit elevated. But remember that we're coming to the end of the financial year, the month as well. And come next week, we will have the auto sales coming, trickling in. In fact, we have Abhishek standing by to tell us exactly what are we penciling in when it comes to the motor sales or auto sales for the month of March.
Auto OEMs will report their monthly volumes in the next week. On a broader note, the numbers are expected to be mixed bag. CV segment is expected to report a muted performance, largely because of the lower fleet utilization levels and limited retail push from the OEM side. In the PV segment, the retails were muted, but it is expected to report a higher single-digit kind of a growth in the volumes, mainly because of the M&M's outperformance and some inventory buildup ahead of the price hike from April onwards. In the two-wheeler segment, OBD2 norms will get implemented from the April 1st, and we expect that the mass market segment players would align their inventories in line with the demand. Eicher Motor is expected to outperform the two-wheeler peg. Tractor segment is expected to outperform the overall automobile volumes in the month of March. It is expected to report a double-digit kind of a growth, mainly because of the favorable base and the inventory build-up ahead of the season. Going forward, retailers are looking towards the retail sales during the upcoming festive seasons like Gudi Padwa and the Chaitra Navaratri.
Right. Okay, that's the take coming in on autos right now. But Gurmeet, wanted to get your sense, the point that you were earlier making, that the time is to focus on actually catching the stocks right after the correction. So what's looking interesting to you?
So, Asha, I think we discussed banks a couple of weeks back. I think Bank Nifty has done well. I think with RBI policy on 9th, I expect the further rate cut. I think you'll also see more liquidity infusion. Also, RBI is changing the regulatory tightening framework. Where, when they were going after gold-based NBFCs, they were going after personal loans, unsecured personal loans. They're worried about the stress building up the unsecured parts. I think there's a bit of a change there, not getting as micro, which I think in general is good for the industry. We like gold-based NBFCs also. I think HFCs also will come in focus. So other than banks, this is a pocket we like. We like this recycling theme. I think that's where probably the opportunity is more long term, whether it is water, whether it is air, whether it is plastic recycling. You call it circular economy, where you extend the life cycle of a particular product by recycling it, refurbishing it, and or changing the end use of the particular product. So that's the space we like. We have Vatek Vaba, we have Ganesh Ecospan in the portfolio. We're looking at few more names in air purification as well. We like the consumer discretionary, especially travel and tourism play. So we have Interglobe in the portfolio. We're looking at some hotel names. We added some ITC hotels when the stock was down quite a bit. And we are looking at very selective, defense names now with the massive surge happening now in Europe and overall under Trump 2.0. I think this is a bit of a mini industrial revolution, if I may call it. It's what it is triggering in terms of look at Sweden, look at France, look at Germany. You'll see a lot of countries upping the defense and the domestic spending work related to their own infra.
Very interesting, actually, that stock list that you've actually spoken about, Gurmeet. And what actually struck in all of that was ITC Hotels. It's been a while that we've heard another hotel name apart from Indian hotels making it to the list, the buy list. Niresh, what's your take on ITC Hotels? How is this one looking on the charts?
So not much data technically, but what we've seen after the listing, the stock did see a lot of volume. So that post-listing selling is over, and now it becomes a buy on dips going forward.
That's the take coming in ITC Hotels. Short and sweet, given the fact that, yes, there's paucity of data when you talk about ITC Hotels. But Kunal, what's your BTST ideas for our viewers?
So I'll go with two buy calls. The first one which I would be suggesting would be about Bajaj Housing Finance. That's a chart which is looking extremely attractive, especially after yesterday's price volume breakout move for the stock. Would look out for targets in the range of 131. Stop loss could be kept at 117. And the second would be about Piramal Pharma. That's also another chart which is looking fairly attractive, trading above the 220 plus mark, a breakout point, flag formation on the daily time frame for Piramal Pharma. Would look out for targets in the range of 232. Stop loss at 218.
Interesting call there. Piramal Pharma, long after it's really come on at least Kunal and Naresh's radar. But Naresh, what about your BTST ideas?
So first would be a buy on Nykaa. The stock is on verge of a breakout, stop loss at 175, target price of 185. Second is a buy on ITC, risk reward trade here. Tried to give a breakout, stop loss at 407, target price of 418.
That is Nykaa coming back on Naresh's radar along with ITC. What's your take coming in on some of these platform companies? You did give a list of stocks that you are liking, actually, Gurmeet. But what about the platform companies? How are you looking at those names like Nykaa, or for the matter of fact, CDSL, PB Fintech, if I can add to it, or Paytm?
So, we basically look at this in two categories. One is the financial platform plays, which is even a depository or an exchange, something like a CAMS, which is more a play on financialization. And then you have the consumption-related platform plays, where we have Zomato in the portfolio. I think near term, I think because of the intense competition in e-commerce, you'll probably see more cash burn in especially in adding dark stores. In fact, Zomato has said advanced it 1,000 dark stores to be added. Actually, now in 25, it's on 26. So in 1 or 2 quarters, you will see that kind of a burn. I really don't call it a burn. In my view, that's more a capex you do because you're setting up more stores. That's adding more capacity actually. So at some point of time, I think the market is trying to price that in, and if the results are slightly better, I think sure. But I think it's a good story over a medium to long term. So I don't know what makes the cut, whether it is Zomato, Swiggy, or Zepto, but you should have some e-commerce play in the portfolio. We are looking at Nykaa now. Haven't really added it because as women participation picks up in workforce, the spend, and especially the Gen Z spend, first pocket is travel and tourism, and the second one is basically BPC, and that's where probably you see more spends coming in. So we are looking at that as well, and we have a very small exposure at PB Fintech as well.
Right, okay. That's the take coming in on some of those platform plays. But Naresh, what's your sense at Zomato? Seems like a bit of a consolidation phase that the stock has hit in, right?
So the stock was earlier holding in a range of say 240 to 300, and now the range has shifted say roughly to 190, 200 on the downside, 230, 240 on the upside. And overall, there is a big support around the 180 mark. This is where it roughly 170, 180 is where it topped out after listing. And there was a cluster of this zones also back in the start of 2024. So I would expect 170, 180 should be a major support, and that should be a very good entry point for the medium term for the stock.
That's the take coming in on Zomato and how that one is looking on the charts at this point in time. But Kunal, I just wanted to get your view, especially on the markets as a whole, given the fact that we are ending the week. It's not been a bad week over the last 2 weeks, isn't it?
It's not been a bad week when you look at this in the context of the last 3 to 4 weeks for the markets. But yes, of course, I think the expectation was that the markets, after yesterday's price recovery, would probably want to see a follow-through up move. We had a good start, to the indices in the first half today. Lot many stocks, large caps, mid caps, were seeing a follow-through up move. But I think midway somewhere we managed to come back into a selling spree for individual stocks. My sense is that this could be that routine profit booking which happens into the FI closing, the fiscal year closing. So I think that could be the major reason for that. Hopefully, I think once the market resumes the next week on 1st of April, that's where I would believe that if we manage to pick up pace, if we manage to come back above 23,800 mark, that could be a second round of a breakout for the indices.
Gurmeet, while it's important to know what's going to work, it's also important to know what you're not going to touch in the financial year ahead, or at least 1 quarter or so. Do you think sectors like IT, some of those globally export auto plays and auto anchors as well, they are best left avoided?
I think we'll have some clarity, Asha, on 2nd of once we cross that mark a few days. I also think a lot of negative is in the price, especially for IT and auto to an extent. I think market is extrapolating the impact a Tesla would have or a BYD would have, and that impact will come over a course of time. And a lot of the price damage has happened, whether it is M&M or Tata Motors or even some of the auto ancillaries. It's a very complex play. Things are not as simple, and we don't know how much of the tariffs will hold and what will be the reciprocal tariffs. And so I think at some point of time, the price would give you an opportunity. I still think that auto, especially two-wheelers and four-wheelers, there is a structural story over the long term. But yes, in the near term, I agree with you. Let events pass. There are and the entire market right now, there are a lot of bargains. You don't have to really do that. Secondly, balance the portfolio. Don't ignore fixed income. Don't ignore gold. I think what market does, it teaches you every now and then to have a very balanced asset allocation. Look at how gold has done last year or so, and look at the long-term returns. If you see 10, 15-year returns, I think the long-term returns are actually catching up with equity. There's hardly a 1% difference now, with equity being 13, 14% and gold being around 12.5. And I think there is scope for bonds look at the supply, the government borrowing plan, which government announced. The net supply in this year is actually lesser than 2023. I've seen this after a while, which means that, fiscally speaking, the supply would be less. And once the rate cut cycle starts to revive growth, you could make serious money on a duration play in a bond fund as well. I've been talking about bonds for a while. So have a more balanced play. And most importantly, as a lot of people say, it's a tougher year. So reset your expectations. If you play for 12-15%, I think there are a lot of opportunities. If you get aggressive, I mean, there's a good chance you might lose capital.
Coming in on some of the sectors, if you look at the financial year gone by, yes, you're seeing some sort of an up move in the mid cap index. 7% higher is what they're shutting shop for this financial year. Also, you have the small cap index that's traded high above over 5%. And surprise, surprise, you have BSE and Mascon Dock among the top gainers in this financial year, despite the correction that we've actually seen in the defense counters. Mascon Dock has managed to hold on to good gains, at least in this financial year. Today is a tad bit lower in trade today. On that note, I believe we have Snehi also, who's standing by to actually wrap the day for us. But before that, thank you so much, Gurmeet, Naresh, as well as Kunal, for being part of the show, as well as taking us through all the market strategy. Over to you, Snehi.
Well, absolutely. Let's wrap up the last trading day of the week, of the month, and as well as FY25. What a year it has been, full of ups and downs for our indices today. Let's first take a look at how today's trading session has panned out. We'll start from there. Nifty, a 100-point cut coming in. It's 0.4% lower, and seems like we're not ending with that 23,500, 24,000 print for this financial year. So quite a cut coming in, and the kind of correction that we have seen is testament to just that. Sensex also 0.3% cut coming in. It's below the 78,000 mark, where it had managed to reach at one point in the trading week, but now we're closing significantly below that. Let's pull up the advanced decline ratio. Rather, it's in the favor of the declines today. And however, in contrary action, India VIX was falling in today's trading session. That is a fall that everybody likes. A 4% cut coming in on India VIX, so looking healthy for the markets in terms of volatility. Nifty Bank has inched a recovery from the day's lowest point, but ending absolutely flat, but above the 51,500 mark for now is Nifty Bank. Let's take a look at what the broader markets have done in today's trading session. And mid-cap and small-cap indices at one point were the market gainers today, but they have simmered losses and in fact reversed all of those gains, because they've gone into the negative territory. A 0.5% cut coming in for mid-cap and 0.3% cut coming in for the small-cap index. Let's highlight some big news makers of the week. The Trump tariff, 25% announcement on automobiles that were not made in the US. The auto sector was in focus on the back of that. Nifty 50 semi-annual rejig happened, so Zomato and Jio Financial replaced BPCL and Britannia. So all four of those stocks were in focus. You of course had BSE in focus in today's trading session on the back of the SEBI consultation note, wherein they've proposed to keep the derivative expiry date same or similar for both the exchanges, on the back of which NSE has deferred its plans of making Monday as their expiry day. BSE gaining and high flyer in today's trade, 16% uptick for BSE coming in. India was mulling a $23 billion import cut, so lots of sectors were in focus. We're just getting word a few minutes ago from ET Now sources that PLI scheme on electronic manufacturing has been approved. So you have the likes of Dixon, Keynes that are in focus on the back of that. On the back of the greed and fear note that we saw this morning, Jefferies has hiked its stake in Reliance and Zomato. So both of those stocks were in focus once again. Over the course of the week, Siemens got nod for the demerger of its energy business from NCLT. So Siemens was also a stock that was in focus. HAL received its first engine delivery from GE. So that stock also has done pretty well. It was a week full of QIPs for the street. You had Restaurant Brands Asia, UCO Bank, Punjab and Sindh Bank, and Central Bank that launched QIPs. Also a whole host of other stocks, the likes of BEML, BEL, Aircon, BHEL, NCC, RVNL, NBCC. Most of these PSUs were in focus on the back of multi-crore order wins that they have bagged. So it was a good week for all of these PSUs names as well. And stocks like REC, Ultratech, Ambuja, Marico, L&T, Trent, TCS, Wipro, all of these stocks were abuzz on the back of a lot of brokerage notes that came in over the course of the week. So it's been an action-packed week for us, but nonetheless, let's just take a look at Nifty once again, because we are very, very close to that 23,500 mark. In fact, we're just dilly-dallying around that level. We'll give the rates some time to adjust, but hopefully we'll close above that mark. And on that note, we'll wrap it up on this edition of Close Ring Trades, wishing our viewers a very happy Gudi Padwa, very happy Eid as well, and a very happy new financial year 26. We'll see you on Tuesday.